Hello everyone. So in today's video, we'll talk about trading timeframes. You must be aware that the stock market has millions of participants, and each participant comes to the market with different amounts of capital, skill and time. So an investor will come to the market and buy stocks to hold for a long period of time, whereas a day trader will come to the market to buy the same stocks and will possibly sell it by the end of the day. Thus, market action is a result of the interactions between various investors and traders operating at different time frames within the same market. So we can broadly categorize market participants into long-term investors, medium-term trader, short-term trader, or a day trader and scalper. So long-term participants can have holding periods ranging from 1 year to 10 years or maybe more as well. Whereas medium-term traders can be positional or swing. Positional traders typically hold positions from 6 to 24 months, whereas a swing trader may hold positions from 2 weeks to up to 6 months. Then a third category, short-term trader. So that can have again swing traders and short-term traders. So short-term trader is anyone who holds positions from 2 days to up to 2 weeks. Then finally, you have the day trader and scalper, who will hold positions anywhere from a few minutes or a few hours and will typically close it at the end of the day. So for you, the first step is to clearly define which kind of trader or investor you are and which time frame you want to operate in. Once you have established this, then it is important for you to identify what other traders in your time frame are doing at that particular time in the market, and this will help you to successfully align with them. So if you align with other traders who are operating within your time frame, the odds of your success dramatically increase. So we will discuss this with examples going forward. So how to profit from the market. So first, understand what trader or investor you are and what time frame you are operating in, and what other traders and investors within your time frame are doing. So this, as I said, this dramatically increases the odds of your success. Or the second way is to identify which time frame traders are controlling the current market activity and align with them. So this will also put you in a very strong position to profit from your trades. So let's look at an example. Over here you can see that this is a chart of ICICI Bank on a weekly time frame, and you can see here that when after the COVID fall in this area, we can clearly see a lot of long wicks. You can see this long wick, then you can see this bullish engulfing candle, then you can see this bullish engulfing candle at very low levels. So this is basically value buying which is happening in the market, and long-term investors were actually controlling the market activity over here. So if in this market you were operating as a day trader, it would have been very difficult for you to make money. Or even if you were operating as a swing trader, it would have been very difficult for you to make any money. But if you had aligned with the long-term investors who were active here, and you would have held your positions for a little bit longer time, you would have done really well. Now again, ICICI Bank on a daily time frame. So we've come to a daily time frame because we'll look at medium term traders. So once over here we were seeing all the long term investors were doing value buying, but as markets moved up and it formed a stage 1 area, the breakout of this attracted a lot of medium term traders. So over here you can see all these wide ranging candles, with obviously the volume would have also been very high. It's not displayed here. So this would have attracted medium-term traders, which includes both positional as well as swing, who would have built positions here. So over here, if you were operating as a day trader, you might have done well, but the real opportunity was buying with the medium-term traders and holding positions for a little bit longer to capture the entire move that was about to play out. Then finally, this was the area that we were looking at. This was value buying, this was medium term traders participating, And then once we had a confirmed uptrend, a lot of short-term traders would have entered the market. So short-term traders look for a confirmed uptrend or a confirmed downtrend, basically a confirmed trend, and then some kind of basing pattern or a consolidation which was formed here, and then any breakout from that would attract a lot of swing as well as short-term traders who would buy positions for a few days. So this is where a lot of swing short-term traders bought in, and over here if you were participating as probably a position trader, you would have done okay, but your risk would have been very high. So this was the right time to participate as a short term or a swing trader. Now finally, when day traders operate within these consolidation areas and they keep looking for sideways or narrow range candles or some sideways price action, and any breakout from that which leads to a lot of momentum, are days when day traders and scalpers participate. So this was one example. Then after this correction, market immediately moved up and broke the high, and then we had a massive rally. Then again, this was a continuation structure for day trading. So there are opportunities there are days in the market where structures for day traders are optimal. And over here, if you if you are a value investor and you are trying to buy here, obviously you are very far away from where the areas where value investors are actually active. So thus it's very important for you to be in the right time frame or to participate with the right market participants who are controlling the market activity. So over here again, you can see the daily chart, and this is more recent. That was post COVID. This is more recent. This is 2022 from start of the year till up to August. So over here you can see that we had a nice correction, and then at the bottom you can see these long wicks that were forming. This is basically again long-term investors buying into the stock. Then we had this up move and test of demand and some long bullish candles. Now these were basically medium-term investors when the trend was again established, and a lot of long-term investors had already built their positions. So this is where medium-term investors would have participated. Then once the trend confirmed and we made a new high and a few days of consolidation, this is where a lot of short-term and swing traders would have entered into the market. And then for day trading, once you have a confirmed uptrend and all other participants, longer term participants, are also aligned in your direction, then you have these 1 or 2 day narrow range candles, one over here like you can look, and then a few days of consolidation and a breakout. So these are optimal opportunities for a day trader to participate. So I hope this helps to understand what kind of market participants are the most active, and why, if you can identify which participants are most active and try to align your trades or your investments along with them, you dramatically increase the odds of success in that position and to profit from that position. So in case you have any questions, please leave them in the comment section and I will make sure I answer them. And yep, that's it for today. Thank you so much.